This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, December 3rd, 2015. Euro dollar. So while the euro is looking a little bit stretched at this point, it would be hard to see this market not take out or test that March multi-year low at 104.62 at this point. Clearly, the market is looking a little bit overextended, but again, we should see a more downside pressure towards this level before any form of a decent correction. Any rallies that we do see over the coming sessions should be well capped now by that previous July base turned resistance in the 108 area, with only a break back above 108 to really take the immediate pressure off the downside. Ultimately, this downtrend remains firmly intact, and again, deeper setbacks are now seen towards that March base at 104.62. Sterling dollar. So cable continues to adhere to a downtrend off that 2015 high at 159.30, making a series of lower tops and lower lows. At this point, the latest setbacks have opened a fresh downside acceleration, which should expose the 2015 base at 145.66 further down. At this point now, any rally should be very well capped ahead of 152, while only a break back above 153.36 would compromise the bearish outlook. Dollar yen. So dollar yen has been caught in some sideways trade over the past several days, with the market confined to a range between 123.75 above and 122.20 below. At this point, we need to see a break above 23.75 to open the door for a retest of the multi-year high from 2015 at 125.85, while inability to close above 123.75, followed by a break back below 122.20, would open the door for an acceleration of declines and suggest that a lower top is in place in favor of a move back down into the 120 area. Again, for now, we need to see a break on either end for clearer directional insight. Euro Swiss. So Euro Swiss continues to chop within a consolidation over the past several weeks and months, although the market continues to trade within a broader recovery structure, which should favor additional upside eventually through 110.50. At this point, setbacks should continue to be very well supported above 107, with only a break back above 107.14 to compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains locked within a downtrend despite this latest recovery rally, though if the market establishes back above 73.82, this would take the pressure off the downside and potentially open a medium-term shift in the structure. But while the market holds below 73.82 on a close basis, there's risk for a lower top and fresh downside in the sessions ahead back towards that multi-year low just ahead of 69 from earlier this year, back in the month of September. Dollar CAD. So dollar CAD continues to trade with a highly constructive outlook as the market looks to retest and break that 11-year peak from September at 134.57. Any setbacks from here should be very well supported into the 130 area, while ultimately only back below 128 would really compromise the highly constructive outlook for dollar CAD. If the market does take out 134.57, this could open the next major upside extension towards 140 in the weeks ahead. Kiwi dollar. So Kiwi has seen some corrective gains in recent trade and is now trading decently off that multi-year low that we've seen back in August. At this point, though, the downtrend remains firmly intact, and only back above the 69 area would compromise this outlook and put the pressure potentially on the top side. Until then, look for a lower top somewhere ahead of the 68 area in favor of the next major downside extension back towards and eventually below those August lows in the 62 area. SPX 500. So the S&P 500 has stalled out after rallying up in early November to 2117, and the market at this point could be looking to either mount a bullish continuation beyond 2117 and back towards the May record high at 2137, or put in a lower top here, which would be confirmed or strengthened on a break and close back below recent lows that we saw at 2068. Ultimately, a break below 2003 would be required to officially shift the structure and accelerate decline. Gold. So gold has seen some intense declines over the past several days, with the market now taking out key psychological barriers at 1050 and trading down to 1046 thus far. At this point, though, daily studies are overextended, so it wouldn't be shocking to see some form of a corrective rally over the coming sessions. But we would need to see a break back above 1100 to take the immediate pressure off the downside and open the door for a more significant acceleration. A close below 1046 would, or even 1050, would suggest that the market is poised for fresh declines down towards next major psychological barriers at 1000.